Peter Eliades back with you. Nice to be back. I hope you feel the same way. Nice to see me back, I hope. Got a lot of things to discuss today. First of all, yes, exciting news about the projection software. We thought it would be ready this past week, but there are little glitches. You have to go through a trade station to make sure this is right and that's right. So we hopefully have taken care of those little glitches, and by the middle of next week, the end of next week, I think at the very latest, can't promise you that, but I think we should be ready to go, where you can just call them up and say, hey, I want this software. Now, I didn't know this to begin with, but I have just found out that you can get some fabulous deals at TradeStation. For example, no platform fee at all. You get their whole fabulous software for nothing. Number two, some of the data for nothing. So those are two of the big expenses usually for people when they're using analysis software for the stock market. So no platform fees, some free data. Number three is you will have access to our software for a monthly fee of $49 a month. We've thought a long time about the pricing for the software. I hope you understand, and I think you do, that this is something that Stefan and I have been working on for almost a year and a half now. He's done an incredible amount of software programming. I think it's 6,000 or 8,000 lines of code, easy language in TradeStation. So it's a very, very tedious program to put together, and I think you're going to find it well worthwhile. So we're not announcing it's ready yet, but hopefully somewhere between Monday and Friday of next week, we'll be giving you a phone number to call, telling people you want the software and you want it now, and you get the TradeStation platform, as I said, free of charge, and low to no commissions depending on what you're trading. I think equities are no commission and futures are low commission. Anyway, these are all things you can discuss, but I wanted to prepare you for the fact that the software is ready to go, okay? So that much having been said, and we'll let you know when you can get it and what number to call and whom to speak to. That much having been said, let's get to the market. The chart that you're looking at is a nominal 10-day projection chart for the S&P. These are market days, of course, so it's 3.5 to 4 days offset. And one of the things I want to point out to you is since the March 23rd low, which is right down here, take a look. Big rally, pullback. Big rally, pullback. Big rally, pullback. Every one of those pullbacks was pinpointed by the downside projections given by the nominal 10-day projection. I shouldn't say that because this one missed by a hair. This one called for 27.90 rounded off, and the low was 27.9785. So it just missed getting down to it. But as you can see, these other two pullbacks came down to the projection window and started up again. Okay, now, there is a projection to the upside outstanding, a very short-term one, calling for at least 29.4512 rounded off on the S&P cash. Let's take a look at the other two that we look at, mostly the Dow and the New York Composite. The Dow projection, nominal 10-day to the upside, calls for a move to at least 24,451 and change. As you can see, we got close to that on Friday of this past week, but not quite up to it. So it's looking from the Dow and the S&P that there's a little bit more left very short term to the upside. And then we could see another pullback. Remember, we're going to show them to you in a moment. We still have significantly higher confirmed projections. So this is kind of guessing that we may get a pullback from these levels. And let me also show you that the New York Composite Index, look at this one, New York Composite Index. It's calling for a minimum move up to 11,358 and change. The high on Friday was 11,360. So that projection was met. And we've told you many times that this tends to be the most accurate projection generator. So that's something to keep an eye on. Let's see how these downside projections have worked. About the same way for the New York. It caught this low, it caught this low, and just missed this low. But now we have a very short-term upside projection that has been met on the New York, but not on the Dow and S&P. So we can make an argument very short-term here that there's going to be another pullback. The most important charts, however, remain to be the 5-week offsets, which is the 24.2 to 27.6 offsets. As you can see, this is on the New York Composite. Significantly higher projections. Let's take a look at the S&P on this. This is the S&P projection. We've showed this to you over the past week or two. 3,371.56 to 3,465.09. Now remember, we theorized, and that's all it was our theory of how this nominal 10-week projection and the nominal 20-week projection would intermix here. We theorized we might have a pullback in here. The last update we did for you was on April 28th. That was right here. We told you at that time, sideways to down, perhaps into May. That's exactly what we've seen. Actually, first the down and then the sideways. But I still think we have a chance of coming back down into this territory before we start moving up towards the projection, if that's what we're going to do. We could easily, of course, at this point, because we're getting so close to the offsets, we could invalidate those projections by moving down below the offset lines. When we first crossed above and gave the projection, you needed to come all the way back to the old lows to invalidate. That's not the case anymore. These offset lines have moved up quickly underneath, and if we start getting a decline that takes us below the offset lines, then they call this big upside projection into question, and it could be invalidated. So that's where we stand with that. And let's take a quick look at this. We crossed above the 5-week offset at around, let's say 2,700 to 2,800 in this area here. This is where we crossed above. My theory was that we come back down and cross above the next longer offsets around the same level. And here we are here. So, in other words, if we start coming down to this level again, 2,800 over the next week or two, let's say, and then move back up, we're going to get the same projections that we already have for nominal 10-week projections. We would get them for nominal 20-week projections too. So that's just an idea as to what might happen. There's nothing in the projections now so far that tells us we're going to come down into the middle of May, but that's a scenario that I have laid out for the past couple of weeks, and so far we've seen something like that, a pullback sideways to down action, and now sideways again. So let's wait and see over the next couple of days. We should get some really good information. Over the next 2 weeks are going to be critical in here. If we're going to invalidate and not give this projection, then we've got to come down really hard over the next few weeks. I don't think that's going to happen because our projections call for higher prices, but we have to be ready for that possibility. Okay, there's one last chart I want to show you. This is a pretty interesting technical chart, and it's on the Dow Jones Industrial Average. Let me crunch this up a little bit so you can see the whole chart. There we go. So this goes back to the 2016 low. This is a closing price chart, Dow Jones Industrial Average. These, I would say, are recognized as the two most important lows in the past 4 years. The February of 16 low, right here, and the Christmas low in 2018, right here. So if you draw a simple trend line, again, this is a closing price chart, a simple trend line, February 16 low, December of 18 low, The typical technical expectation, if you break the trend line, and we broke it in spades, typical technical expectation, let's bring this a little closer now, is that you would rally back to the trend line from underneath. Well, look what we did. Virtually exactly up to the trend line from underneath on April 29th. So this is a potentially bearish scenario. Unless we can get above this trend line, this is telling us that it met resistance where it should have met it, and that it has failed to get through that resistance so far. So I like trend lines like these that you break significantly and then pop back up to them from underneath. If you have a downtrend, or if you have an uptrend, then you pop back up to them from above. So I should say back down to them from above. So this is where we're looking at technically. If we can get above on the Dow over the next week or so, get above the 25,000 level, then you can start making bets on the fact that those upside projections are going to be approached or met. That's where we stand. It's good to be back with you. Please give us your comments. Hopefully they're positive. If you have not subscribed as yet, please subscribe. I hope you're getting excited about the software, because this should be the week. We will give you the specific details as soon as we have them from TradeStation. Thanks a lot for watching. We'll talk to you on, I guess, Monday evening.